You saw money get made out of nowhere and all of a sudden you're locked in. So how am I doing things so wrong that I'm worse than just a random button click? You don't have to leave your corporate career, to be a successful trader. If I'm going to have live money, if I'm going to lose it, I want to lose it myself. I don't want them to lose it.
When I told my manager, I shouldn't say that. I told him that it was for day trading. He thought I was going crazy, and I shouldn't do that.
But until you get on the bike and you try to balance yourself, you're never going to know what that feels like, and you're probably going to fall off. I used to glorify full-time trading. I used to think like that was the badge of honor. If you left your job and all you did was trade, you really made it. Keep it simple, guys. Keep it simple. It's a long game. If it was easy, everybody would do it.
Hello guys, what's going on? That's Sassaki here, and today I have a very, very special guest, which is Zach. I'm very happy to have this episode with him. We've been waiting to do this for a long time, and first of all, I want to welcome him. So, Zach, welcome to our BlackArrow Podcast, and how are you doing today?
Good. Thanks so much for having me. Really excited to get to sit down with you guys. Doing well. Happy to be here.
Okay, for everyone who doesn't know yet, Zach is a mentor, influencer of trading, and we're going to speak about his career in trading, how he got into day trading. I want to hear about how was his journey in general. And so if you like this content, just comment here on our link, and we're going to bring more and more influencers and mentors to you guys. So to start off our conversation, Zach, something that I've been willing to ask you, how did you actually start in trading? Was it like a long time ago? How long was it ago? And what was the reason why you got into trading?
Yeah. Happy to dig into it. So it's crazy to say that I'm on my 7th year of trading. I try to really put my finger on how long I've been in the markets because it's always different, right? Is it when you started trading? Is it when you placed your first trade, when you first looked at a chart and had some risk on the line, or when you really got solid into day trading, day in and day out for looking at technicals? But I'm about on my 7th year in the markets. For me, it started out with just a stock trade. Really, my father-in-law saying, hey, you know what? You're doing well in your outside career. It's about time you look at the investment accounts, start to plan for your retirement. And I think I've been asked a couple times what the first stock was. I think it was Apple. But I had set up that, basic investment brokerage, put, a very small amount of money into Apple or whatever stock it was at the time. And immediately, of course, watched it go up. And I thought, wait a minute. I'm over here working all day. I'm outside, breaking my back and working hard for, X amount of money. And I have this potentially infinite amount of money, right, to be made in the markets. And that was like almost everybody else, my hook in, right? You saw money get made out of nowhere and all of a sudden you're locked in. So that was, back and forth for a while. I quickly transitioned into crypto trading. I'm a US based trader here. It wasn't really active day trading so much as it was just trying to figure out technicals, place buy orders because it was long only at the time. Losing money in crypto, losing money in stocks to start, of course. I started to get really serious in Forex once I finally transitioned after a few years, probably 3-4 years, got really serious into trading Forex, which was pretty solid for a while. That's where I started to gain some of my consistency after just strategy hopping, doing every mistake you could possibly make, right? Going through all of the emotions of figuring out that I could have just clicked the button, buy and sell randomly and been doing better than I was doing because it was a straight shot down for a while. But I ended up trading Forex for a while, live Forex accounts, started to get consistent there. And I transitioned into prop firms. I learned about prop firms and I wanted to try my hand at that. This was around the time, at least for US-based traders, Forex prop firms started to face a lot of issues. This was a couple of years back. That was right about the time that I was going full-time trading. I went to school, business school, got out, worked for about 9 years before I left my full-time career to go full-time trading in 2024. Let me try to get the years right on this one. I believe the summer of 2024.
You had a corporate job, like working 9 to 5 and then trading probably at night or when you have some free time to do some trades.
Yeah. So I'm in my mid 30s now, or I should say early 30s. So I came to trading a little bit later in life, but I had been out of school. I'd been working jobs that I really did enjoy. I was working, outside sales, management. I was starting to get really focused into trading as I was at that last career. And what I would actually do, and I talked about this a little bit in my community and on past podcasts, but what I would do was work a full day, 9, 10 hours. I would get off of work, maybe read a trading psychology book, try to study, watch some videos, learn. I would set my alarm, and I was actually using my Apple Watch at the time for the middle of the night. So I would stop waking my wife up, and I would wake up at maybe 12, 1 in the morning Eastern time over here in New York time. And I would trade London Open in Forex. Maybe I would go back to sleep before I went to work at, 7, 8 in the morning, maybe read some books. But I did that for quite a while. I really did that for quite a while. And then, of course, during the day at my job, I was a little bit distracted and, watching charts as well and setting alerts. But yeah, it was a couple of years of really, really solid focus. And then towards the end, before I gained some of that consistency and then ended up to say, hey, you know what, I'm going to make a real run at this and leave my comfort of my corporate career. It was a lot. It was a lot of that for a while. But yeah, so going back a couple of years, I moved into futures, trading with futures prop firms. And that's where I've been, ever since, trading with live accounts and futures prop firm accounts that I've done pretty well with.
So what's I did the same in terms of getting sick of my job that I had. I used to work in sales as well before coming to the trading world. And I have a funny story that I tried to quit my job, and then when I told my manager, I shouldn't say that. I told him that it was for day trading. He thought I was going crazy, and I shouldn't do that. Yeah. So it's always interesting stories when it comes to this transition. So when you decided, I'm sure it's not something that you decided on one night. It's months of thoughts but were you like living by yourself and you had to do the decision, or did you think with someone else, like, family or whatever, to actually get trading your real career, like in terms of changing the path, or was it something pretty easy for you?
No, it was a long decision making process before I really told my boss, "Hey, I'm gonna step away." I'll preface it with this before I tell my story. I used to glorify full-time trading. I used to think like that was the badge of honor. If you left your job and all you did was trade, you really made it. And I'd say, nowadays where I do work, outside, I have other sources of income. Of course, I make content. I do all of that type of stuff as well. I have a lot of partners and things there. I would say to anybody listening, you don't have to leave your corporate career, to be a successful trader. You could probably find ways to keep outside income. Maybe you do leave your corporate career, but you still have outside sources of income. I think it's important to not only just have consistent financial income coming in, to take pressure off of yourself from trading and to be able to scale. Because even as you get profitable, as you start to make money, it's always easier to make more money with more money, right? It's always easier to take on less risk and to produce, a smaller percent return with a larger amount of capital. So we always want to fund, right? We always want to raise funds. We see it from Wall Street and, big investment institutions. But so for me, back to the question, for me, I had started to gain consistency. I really was enamored with the markets, enamored with the charts. My wife saw I was working at it for a long period of time. My family from home, saw I was working at it for a long period of time. And for me, I really made a game plan over the course of a year before I had left to bankroll, to save quite a bit of capital, not only for trading, but also for, managing just mortgage and bills and standard income. So I made a pretty big off ramp for myself ahead of time. I didn't just say, hey, I'm going to quit my job and my back's against the wall and I have $5,000 and, that's it. It's in the account and I need to make money this month to pay mortgage. I had set myself up with a long off ramp. And I'm glad I did, because it really didn't go exactly how I thought it was going to go. It's almost always that we think we're farther along than we are, right? So, about the time I was leaving, I was so focused on Forex prop firms. A lot of those melted down. I ended up wasting some time and money there. And it was a back and forth, of course. And I wasn't as experienced as I am now. But it was definitely a back and forth for a while. So that was the thought process. But I'm grateful that I had maybe outside sources, other people around, not my close-knit family, had said, this is crazy, you probably shouldn't do this. But I'm very grateful I had a super supportive wife. When I came to her, I think unlike a lot of others, that are out there, she said, quit your job, quit your job. You're going to be fine. You're going to be great. You're going to do it. My family, really the same thing. I had been serious about it I'm grateful. I'm really grateful, because I know not everybody has that. And it was nice to have that support. But again, I think I approached it in a really serious manner. I approached it in a way that this is a business. And with any business, here's my starting capital, here's what I'm going to look to do for year one, year two. And I
Mhm.
had really, really reasonable expectations. I didn't say, hey, you know what, I'm going to quit my job and make $1 million on, in 1 month trading. No, I said, hey, I'm going to leave my job, and even though I have capital and I'm making money here, this is probably going to be a very, very slow growth. So yeah, that was a bit of that transition, and it's been fun. It's been a long road for sure. The markets are unforgiving, but it's been fun up to this point.
That's great. And in terms of markets, you step into crypto, forex, also futures with prop firms and stuff. For people that were watching this and they're beginners or they're trying to get into trading and get the consistency, which is something that we all try to get one day, as if it was a place where you go there and you never. It's not like that. We know that, but
Hmm.
which market do you think um, was more fit for you, if there's a way to say that, or the market that you really decided, so I'm gonna stick to this one, I'm not gonna try everything like crypto, like forex, like, and
Yeah.
how was this transition like, trying different markets? Because I did the same, like I also went to crypto. I got the nfts phase, like it was crazy. um but how was it for you to this kind of decide, let's say this way, in which market you would trade more seriously?
Yeah. So for me, Forex wasn't bad. That was kind of where I landed after crypto. Crypto was just too crazy. It wasn't structured, the way that I wanted. It didn't feel safe. I saw all of these, brokerages melt down. That was kind of scary. I thought, if I'm going to have live money, if I'm going to lose it, I want to lose it myself. I don't want them to lose it. Forex wasn't bad, but I felt for day trading and for more aggressive trading, futures was just a better medium. And I almost wish I found futures sooner, everything for a reason. But futures, by way of having a centralized, regulated exchange where all of the price data, the volume data, the order flow is all regulated, it's all centralized. Very, very low commissions, access to high margin, access to really good platforms and software, and next to no spreads, right? No swaps. Of course, you have intraday margin requirements that are pretty high if you're trading live accounts. But for me, futures just presented this more professional, stable, secure asset, class, I guess, to be able to trade.
Mhm.
And I think for intraday trading, right, for everything outside of higher time frame swing trading for long periods of time, I think futures is a great medium. And I also always wanted to trade the US stock market. I was just, it felt like a good middle ground that everybody's watching, right? All of these things, maybe in my investment portfolio, were correlated to the NASDAQ 100, the S&P, the Dow Jones. So it allowed me to do that because I wasn't able to trade CFDs as a US based trader in the Forex and CFD market. They just were not available. So that was pretty solid. I definitely came over from Forex, I will say, a little bit overconfident, and futures were a little bit different. I was trading on lower time frames exclusively, where I had been swing trading a lot in the Forex market. And all of a sudden you hop over to Nasdaq and you're on a low time frame and you're trying to figure out position sizing, which is different, micros or minis. You can end up very oversized very quickly. So there was a learning curve there. Luckily for me at futures, it was on props to begin with there. But yeah, I'd say I've really found my groove in futures for sure. The only other thing I'll add to this is, outside of that, I do still trade some options, some just standard common stock for higher time frame, longer holds, and I think that can be good as well. Maybe you're lower risk. You're not so leveraged. You don't have to worry about contract changeover stuff you're not going to look at for a long period of time. And then even just naked options, I think, are a decent option for that. No pun intended. But for primarily day trading, I think futures are a great spot for really almost all traders.
You said about the position sizing. It's very interesting. I think that's one of the main challenges for traders that are changing between markets, and they try to find what is the most, um, I would say, the most fit for them, because different traders have different um, setups and stuff. And for me, it was really a challenge when I went from crypto market, which we are talking about 2022. So we had Bitcoin going crazy and the NFTs going crazy as well. And then when I got into futures, it was such a challenge for me. For example, um, how am I going to manage my positions in terms of size? Because I don't know how, how much. And Forex, you have even if I think Forex it's different because you can do like a fraction of
Mhm.
the contract, so it's kind of easier in a way if you look at it, but it's quite a challenge. So you were mentioning that during before you decided to actually do day trading or this career for full time, you went and studied in psychology books, which is a very very important part for day trading. And what was the setup or the strategy that you designed through these years of experience that it is now your style? So did you spend more time in the beginning, the foundation of the psychology of a trader, like do not get, you know uh don't have that angry day where you, I think we all been there, or did you start trying different setups in order to see how it works? I see that you do swing
Yeah.
trading as well, which is great. I think people should try it more. People are just like, oh, day trade, but come on, guys, there's a lot of things to do other than day
Mhm.
trading as well. But how was this process to kind of um, decide on how your strategy it would be, and how did you do it through the years?
Yeah. So for me, I think I struggled a lot. I'll talk about the struggles first, maybe, and then how I transitioned.
Hmm.
I struggled a lot with trying to beat the market, right? And when I look back on it, I think that's really what I was trying to do. I was trying to outsmart the market. I felt that it was a math equation to be solved. And I struggled a lot trying to create this 100% objective, rules based system where I was a machine and indicators on indicators on indicators. And if I could just figure this out, all I have to do is click the button. And when I struggled for a long period of time, a lot of frustration, a lot of lost money doing that, I finally worked with a couple of people, I can't credit it all to myself, that were trading more discretionary. They were trading a very simple price action based approach, very technical. And it wasn't until I stripped my charts, really took almost everything off outside of just price action itself, and started to apply some of my discretion, some of my intuition, some of my experience, did I start to make some progress. Another big portion of that was the psychology side, and I think it goes well with the way that I think about the markets. There needs to be an edge based on however you're trading, right? Some form of technicals or fundamentals or whatever we want to use that actually creates a positive expectancy. But that's not the hard part. The hard part is, like you were saying, not to have that angry day, not to have the tilt day where, okay, you did everything you're supposed to do in the morning. You did your pre-market. You took one trade. It was a good trade, but it was a loss. It came out and whipped you out. Now we have two paths. We can go on path one where we say, okay, good loss. I'm going to journal it and then maybe just go out and touch some grass. Or path two, where mass destruction, where we just, over leverage, double down, keep trading. So understanding, and this came from some trading psychology books and also just by experience, right? Just unfortunately putting my hand on the stove so many times and getting burned. But understanding
So
the nature
did
of
you have some angry days?
it. Yeah, I did.
It's
With
crazy. We have to have, right. I had to. That's I think it's difficult to learn from
of course.
books. Like, I wish there's a way I can tell everyone don't do this. Just but even though I'm pretty sure you read books before, but do you think there's a way people can learn without having to burn their hands?
I don't know that there is. I think that there's going to be a trial by fire for everybody, right? And I think trading's a lot like learning to ride a bicycle, right? Here's the part that I think. You can read all of the books about riding a bicycle. Someone can show you where the pedals are, where the brakes are, where the handlebars are. You can study physics if you want around, but until you get on the bike and you try to balance yourself, you're never going to know what that feels like, and you're probably going to fall off, right? And until you feel that and fall off, you're never really going to be able to put that all of that logic together, right? All of the math behind it together. So I do think that everybody has to develop a strategy and then has to go on tilt, has to have that frustrating day where they think, okay, if I just take one more trade, I can get back. Or if I just move my stop loss away, I get rid of it, it can come back. I just need to. And so we almost need to do that a little bit. There's a part of it is always just going to be experience. Um, I think working with the right people can help. I think reading the books and really meditating on it and thinking about it can help early on. And a lot of traders don't do that. They just study the setup, they study the technicals, they study the next indicator, they see what somebody else is using, and they think, okay, if I just have that, I won't have to deal with all of this over here. If I just have that tool, I won't have the losing day, right? And it's just not the case. So yeah, I think trying to think in the nature of probabilities was really important. Just the randomness of the market on the short term. We're going to take losses. That's part of the game. And then just applying some discipline, right? Understanding I was going to have to keep my trading pretty simple, apply my discretion. Some days I was just not going to be right. My discretion was not going to serve me. And some days, even if I was right, I was doing everything I was supposed to do, I'm still going to take losses. I'm not going to have a 100% win rate or even close to it, not a 90 or an 80% win rate, at least for me. So that means I'm going to take, a lot of losses. I'm going to have red days, maybe even weeks and months. So how can you keep yourself controlled and actually execute a strategy long enough to see if it even works, right? Let alone just, trying to build out a strategy that works. So yeah, that was a big, a big part of growth for me, and something that I still try to do because I don't have it all figured out. I'm not the best trader in the world. I try to continue to build on that, every day and get better. And I find the best traders do.
And so now going into your Instagram accounts and all your content that you're putting out right now, when did you start sharing content somehow? Like, do you do mentorships? Like, when did you, and the name Real Deal, Zach, when did it all start in terms of being a mentor in trading?
Yeah, so this is about 2 years back. I always try to get the dates right. I actually got the first one wrong. I believe I left my job summer of 2023. I started to put out content in the beginning of 2024. So I'm past 2 years. It's 2026 now because it's about 2 years that I've been putting out content. Yeah, I had been in a couple of different people's groups, communities, mentorships, and towards the time that I started to put out my own, I had been on somebody else's live stream a lot, right? Often every morning I was talking, and I thought, you know what? I'd like to build my own community. I'd like to at least just have a group of traders around me, people that were, working on the same stuff, and try to share, right? Try to share my journey. And that spiraled really quickly. I started to put out content. I started to live stream. I made a couple of videos. And really within the first couple of months, I got invited on to do a couple of podcasts, not too different from what we're doing right here. And yeah, it took off from there. I started live streaming wasn't live streaming from the beginning on YouTube every day, but for almost now a year and a half, I've been live streaming on YouTube almost every morning, YouTube Kick and X, a Discord community with a ton of members. I've gone back and forth with coaching and communities. Maybe by the time this rolls out, I'll have something new. You guys will have to come and check it out and see. But yeah, it's been an awesome journey. I really do enjoy having my own community that I'm able to share. I'm able to help out other traders as best as I possibly can through showing what works for me, what doesn't work for me. And I've been able to speak at live events in person. I just got back from an event not too long ago, which was great. It's opened a lot of doors. It's really been awesome.
And now going to the prop firms, futures trading, which is where I realized that most people in the US are trading futures. We now have the PDT rule. It's over, right? So people are going to maybe be trying more on equities and stocks. But prop trading has rules which cash accounts don't have. So you can have the angry day and burn your account, which is obviously horrible. But how do you see the advantages of, especially beginners, I think, for trading using prop trading firms, because they have rules. I feel like they're kind of protected somehow from doing these things, because trading, if you're trading a cash account, you make your own rules, right? Which is dangerous. So how do you see this for beginners, or for even people that have been trading for longer, having a prop firm trading account in terms of risk management, discipline, and so on?
I think it's a big advantage. I wish I started on prop firms, coming up rather than live accounts. Important for me to say I'm partnered and affiliated with some prop firms, so I can't be unbiased, but I always try to give my honest opinion. I started on live accounts, like you said, right? And when you have those tougher days on live accounts, it can be really bad. When you make a fat finger mistake, it can be really bad, right? All of the amount of money that you put into that account is at risk. With prop firms, especially for beginners, you don't have that, right? You have limited downside risk. And I will say, you don't have to learn on prop firms. You can learn on demo, you can learn on paper trading. But at a certain point, because I hear this argument made, everybody's going to have to come from demo paper into some kind of risk on the line, either a live account or a prop firm. And a prop firm can be a really good way to limit that downside risk, right? We're probably, and this is tough to say, but it's the truth. We're probably not going to make money our first week of trading with capital, right? We're probably not going to make money that first month. So how can we limit that downside risk? Prop firms present a really awesome opportunity to do that. And then past beginners just learning on evals that are $40, $100 a piece, where you have access to live market data. You can get comfortable trading on a platform, right, that you're going to trade maybe with a live account in the future. As you start to be able to get consistent, right, you can leverage prop firms, which is what I've been able to do quite a bit, and a lot of more advanced traders that are gaining consistency are able to do. And there's a lot of upside potential, right? There's certainly downsides, right? There's certainly rules, there's regulations, things that you don't have to deal with in live accounts. There's minimum trading days and consistency rules and tests and all these different things. But I think they both serve a purpose, right? For beginners, especially, we often think of, well, look at how much money I could make. Look at, if I don't have these rules, look at what I could make, right? And as a beginner, it's hard to say. You shouldn't be focused on that. You should be focused on, how much can I lose? What is my downside potential, right? So how can I gain as much experience as I can while I'm limiting the amount of money that I have to spend to do that? Because we have to put our hand on the stove, enough times, like we said. And prop firms are a great option for that. And then as you progress, I think it's up to everybody to decide, hey, this is a good opportunity for me, or maybe it's a combination of what I do a bit of live accounts as well, right? I don't think there's anything wrong with saying I'm going to trade prop accounts for maybe more aggressive scalping, intraday futures, or as I start to build my trading capital, I'm also going to trade live accounts or transition off completely. But yeah, I think there's a reason that prop accounts are so popular. There's a reason that so many traders are on them now, and it's leverage and downside risk.
I would say the same. I wish I had my first trading account in a prop firm. Or like a challenge, because if I did, I wouldn't lose so much money in the beginning, like especially the first 4 to 6 months, because like you said, I think it's funny how everyone goes through the same phases. Like, I wish there was a way people knew that they shouldn't have an angry day and lose control of their trades. And like you said, like in a cash account, you don't have those rules, so you are not protected just like you are in a prop firm account. So yes, I wish people really heard that it's safer to start a prop trading account rather than just using your live account money, which is dangerous. But that's the way you said. It's like riding a bicycle. Like you can read 100 books, but maybe you have to fall for yourself to learn what it takes to be a trader. If you know what I mean. So now, in terms of trading hours, I was very interested because you said back in the day when you were working, you would wake up like 1 a.m. to trade London. So now changing to futures and which assets are you trading mostly right now? If there is a specific asset that you trade, and what trading hours do you like to trade usually?
Sure. Yeah. So I'm back on normal hours. No more middle of the night stuff.
Okay.
I'm typically trading New York hours, New York Stock Exchange Open. I like to trade the Open. If I do anything that's going to be overnight or pre-market, it's more of like a swing style trade. It's not really swing because it's one day, but maybe it's something I put on and then I walk away. I set some alerts. But primarily, I'm NYSE Open throughout the trading session for the day. And I'm mostly trading US indices, either NQ or the Dow YM. Those are my two primary assets. I've bounced around with some other stuff. I traded ES for a while, a little bit of gold here and there. But I really found that coming off of Forex, where I was trading so many different Forex pairs and just a lot of different assets, that focusing on one or two things, one or two charts at most, helped me a lot. And for a while, it was really always one. I was focused on just NQ or just ES, right? For like months and months and months. And, the downside is maybe that market is not setting up for you. It's choppy. It's not a lot of opportunity. But I think the upside is you get such a good, intimate, feel for what that chart looks like. You watch it day over day. You know exactly what price it's trading at. when you wake up in the morning, you know what yesterday's price action looked like. So I still take a lot of that to what I do today, intraday with futures. I think, these markets are so fast. NASDAQ is so fast. And if you're going to try to trade NASDAQ, ES, YM, gold, crude oil, lean hogs, copper, silver, right? Like everything, you're never really going to develop one good relationship with an asset. So maybe for swing trading, right? For higher time frame stuff where the charts are on the daily and they're taking you have time, right? You have a lot of time to get a feel for it. You can't just trade one. But for futures, I really like to focus on just one. And for as far as an asset class, right, indices, and then for me, it's primarily YM and NQ. And I'll trade YM a little bit slower, a little bit higher time frame. Maybe it's one trade, two trades a day. I look for my setup in the morning. Maybe I wait for it to come. And then NASDAQ, I'm trading a little bit more aggressive, a little bit more scalpier, higher frequency throughout the day. But I think if I had to try to focus on 100 other things, I'd never get good at one.
That's good mindset. So you never traded crypto again? Because
no, I got off. No, I really only ever lost money in crypto. And I just never had that great story where I'm a meme coin or I made a bunch of money, and it just, at the time, I didn't want to trade unregulated brokers. I had considerable amount of money for me. It's always different for everybody, but I didn't want to put it anywhere. And it was like long only, not a lot of leverage. It just wasn't a good medium for day trading. At least back then. A lot has changed. There's a lot more access now. Forex also, I really just took my foot off the gas. And I think Forex could be a good medium for trading if you are a swing trader, or maybe if you really wanted exposure to, to currencies for some reason. But for swing trading, it's not bad. I think a lot of those pairs present really clean, technical movements over longer periods of time. And, the leverage to get that done is not that bad. But yeah, no, never back to crypto. No NFTs for me. Nothing crazy there.
Okay, and now just our curiosity. You said in the very beginning, I think you're supposed to start with the stocks and so on, because that's the first thing. When we don't know about the market, we only know that there's stocks and there's a stock market. Do you still look at some stocks in terms of, I wouldn't say for the trading, of course, but in terms of long-term investments? Like, for example, you made a good money this month in trading, or this semester, whatever. Do you consider putting money in some stock for the long term, or you're more like, no, that's just keep this money here in my account? Or what's your behavior like in terms of long term goals for stocks or whatever in the market?
For sure. I'm definitely of the camp of pulling money out of the day trading account and going for, longer term holding. I think you can always look to scale in day trading, and I look to do that with live accounts, with prop firms. But I think if you're not taking advantage of just more steady, secure, right, lower risk assets at the same time, which would be stocks and maybe options, right? Like, I'm talking about leaps, longer term options, not zero DTE or anything like that. I think you're leaving a lot on the table. So for me, I do watch stocks. Again, like you said, it's more, I don't even know if it's considered trading anymore as much as it is investing, right? It's, position trading, I guess you would say, much longer periods of time, not a couple of days, usually not a couple of weeks, months and months at a time. I think is really important. And I think early on, I didn't really do that. And I probably didn't do enough of it. And I probably wasn't as well-rounded of a trader as I'm becoming now. But I think each of these assets, and maybe crypto presents a really good opportunity for exposure for longer term holding for other people. So don't let me turn anybody off. But I think as you become a well-rounded trader, maybe you're going to focus on trading, NASDAQ intraday, right? Or whatever, asset gold. You're going to do well maybe and make some money. I think it's really important to think long-term. How am I going to be able to scale this? How am I going to be able to leverage these other tools that are available to me in the market? And sure, we can always trade larger and try to scale up from there. But I think there's so much opportunity just in the general stock market to not take advantage of that is crazy. So I'm trying to do more of it. I'm actually trying to do more of it. I find it difficult to pull my focus away from staring at NASDAQ all day and looking at the chart and what's going on. And, what's the headline or the situation, unfortunately, in the Middle East is driving the markets around. But I think it's really important. I try to dedicate, at least a couple of days per month, really focused, where I just look at, the stock market. I understand, higher time frame narrative. I kind of, reposition my portfolio. I look at what I'm doing, where I could be making more. And, maybe it's other instruments like, US Treasury bills, right? T-bills, where you're looking at really de-risk things that are not going to provide this big upside potential that day trading or options will, but they're going to be good for parking cash, right? You don't want to end up with tons and tons of cash in a checking account or a savings account. You're just leaving money on the table. So I think it's important to do that.
Yeah, I think it's interesting how you're able to see all of these different markets. Like for me, and I think for a lot of people that are watching this and are traders or beginners or whatever, um, you have it's different mindset to day trading and for long term positions. Like you said, the
Mhm.
position trade is of course is a very different mindset, and I have a hard time actually, I'm a horrible position trader, but I don't. It's so different for me. Like,
Mhm.
and I think I never really did a good position trade. Like, even there are some IPOs that I went in and, man, they were horrible. I feel like just with me, they don't work. But the thing is, do you kind of recommend people to have some specific spare time on their week or their month to know a little bit more about markets in general, because we spend so much time consuming content on day trading, moving
Mhm.
average, setups, all that stuff, and we actually forget how important it is to understand the market, the fundamentals in general. It's something that I have been trying to improve myself because, like I said, I'm a horrible fundamentals trader and position trader. But do you think that would be important for people to have this knowledge or spare some time in their week or whatever to get know a little bit more about it?
Yeah, yeah. I think the way that I would encourage guys, because I was the same and most people are the same. Oh, I'm going to figure out day trading and then I'm just going to make that work, and that's what I'll do every day, and that's okay. But as you gain capital, I think we're always going to need, let's say, at the bare minimum, an investment, a retirement account, right? Something that's going to be there as we retire. If it's not going to be something from a job, and maybe we are going to make it from day trading, that's going to be allocated to the stock market in general. We're going to have some allocation there. So I think early on, maybe before you have a lot of money to put away, starting to put some money into just standard investment brokerages accounts that are set for retirement, that are set for longer term holdings, where you are position trading, right? You're allocating some and trying to challenge yourself to have those longer time frame holds, I think, is really important. So I'd encourage anybody to open up a free account that is actively trading, that's also not doing this. It just has money in a savings and a checking account, the way so many people end up. Again, not financial advice, but I would encourage that. And I think if you can detach yourself from the idea of day trading it, and you can just put money in, and really hold on for long periods of time, it's a whole new world. It's a whole new world. I'm a little bit of the opposite, where I'm a great holder. I'm a great position trader. I can hold on to trades for long periods of time. And I think you
If it
can,
is a loss, you can still hold it.
yeah, usually I
Okay.
can I can hang on. Yeah, I can hang on. I mean, I have other weak points for sure, but I can hang on to my stuff. And I think if you get in, to a couple of those positions, and you recognize the power of really long-term holds in the stock market, again, maybe it's SPY or something super super simple, right? You can really see the ability to compound there, the ability to take your money that might just be sitting in savings, or to de-risk some. So again, different than day trading, which I think we all want to focus on technicals, right? What we're going to trade, the risk management, the approach, the mindset, but that gives you a set of skills that you can leverage as well. And so, yeah, again, I wish personally, I'm not the expert at it, not the expert at fundamentals, not the expert at stocks at all. Options are newer to me, honestly. But I think I wish I had done it earlier. I really do wish I had done it earlier and put more money to the side for that, and just got better versed. So, because I think it's powerful.
Okay. Now we have a very interesting part of the podcast, which I'm going to show you, Zach, a trade that I did this week,
Let's do it.
and then you're gonna tell me what do you think about it and whether you do it in a different way. Let me just set up my BlackArrow. Let me make it simple here. I'm gonna share my screen with you, and then let's see what do you think. on my on my trading style. Let's see. Let's see what.
It's fun. It's fun to do because everybody trades such a different style, different approach. I think there. It's one of the things I love about the markets. There's so many different ways you could go about this, and so many different ways you can make money. I'm happy to review and give my insights. We'll see.
Okay. So that's NQ, by the way. So what I did from yesterday to today. So I've been for a long time. I've been a sort of like night trader. I was gonna ask you and I forgot about it. Uh, you trade the open of the Nasdaq when you usually do. All right. Okay. That's your.
Yeah. Yeah, but for a few hours, right? Not just, not just 9:30 right at the open that I'm looking to scalp or anything. I typically will trade the open for a few hours and then, maybe into the afternoon if I have, conditions that look really, really, really right. And then outside of that, I will take higher time frame swing trades. Like I said, maybe for the overnight session, I'll look at NASDAQ, something really clean sets up or YM sets up. I'll put a trade on that's nighttime for me, and I'll hold that all the way through the next day. But kind of two different styles there.
No, that's interesting. Like this
Yeah.
one was kind of I wouldn't say overnight, but because CME closes at 6 p.m. EST or
Yeah, so NYSE ends
oh
at 4 p.m. EST, and then most prop firm accounts are kicking you out there. But then yeah, session changeover is at that time, is 1 hour after.
yeah. So what I did from yesterday to today. So this is 21 moving average that I have on my chart. This one.
Hmm.
So I'm a trend follower, by the way, but I love to take the pullbacks. All right. So
Hmm.
when this started to happen, let me grab this. So the market was in a in a bearish trend here. So like this, something like that. And then when the market starts to break through on the bullish trend, what I do is I take a look on the moving average. You can see that the color is different because the indicator that I use. And when it starts going down, I wait until it touches or almost touches the 20 moving average, which is this one.
Hmm.
All right. So I'm looking at it like this. So the market is kind of trying to reverse the trend. And then what I do is that I position my entry above like the last candle. So
Hmm.
if it breaks through this one, I'm going to enter, which I did right here. Then my stop loss is under the 21 moving average, and the my risk is that twice as my loss is my take profit. So basically, I will have these two in the platform. Oh, sorry, it's three times. Let me set up just real quick, just a second. So
No, it's
let's
cool. I
go
get the
there.
breakdown of some of the tools in the BlackArrow
Yeah,
platform, which
so
I'm,
you
I'm,
can
I'm
yeah
excited. I'm excited to test. I'm really excited to test. I've been
yeah
looking
we hope
for.
to
Yeah,
see you using very soon.
absolutely. You guys will have to check out the YouTube. I'll definitely have some videos once I get to testing it for sure.
Amazing. So, guys, stay updated. We're going to speak about his social media very, very soon, and we're going to have Zach on testing our platform. It's going to be awesome. So, the stop loss is under 20 moving average. Is a trend following trade, and then I twice as the risk I placed my take profit, which was here. It was reached, and that's what I did.
Yeah.
What did you think?
I listen. I like it. I think it's very simple, which is something I like about the chart. Not a ton of indicators, not a ton of different ways that you need to try to interpret. I think there's going to be advantages and disadvantages of an approach like this. I think
Mhm.
the only areas that I'd say for like potential improvement, and I'm not going to know exactly what the strategy is going to produce, right? Unless I went through and back tested it. But I think areas for improvement on something like this, on a trend following approach, trend following strategy,
Mhm.
catching a turn, catching a breakout like that, you're going to have a big advantage to potentially catch a big movement, right? It's not just a small scalpy within the range, within choppy consolidating conditions. So I think it might call for at least testing something like a trailing stop or a wider take profit, wider stop. to really try to capture that big movement, because you're looking for this change in movement where we're coming from a downtrend to an uptrend. I like that you're waiting for a pullback. I like that you're entering above, bearish candles to the downside, so you're not just buying into selling pressure. But because we don't have a lot of higher time frame levels, maybe bigger areas that we're concerned about that could be liquidity or anything like that, and we're going for a raw trend following, I think the big opportunity is going to be to capture really big outsized turns in the market. And the way to do that is to go with a wider take profit or no take profit at all, and figure out some kind of trailing method, maybe stop loss, just below 5-minute candles, or, on candle closures without sweeping prior bar lows. A couple different ways to go about it. But I am a fan of keeping things extremely simple. I'm a fan of really not creating this overcomplicated, complex, foo-foo craziness in the market that really is just going to be, distilled down to, we think it's going to go up, we think it's going to go down, we think this is a good way to structure risk, so here's where we're going to enter, and here's how we're going to manage the trade. So I like it. I like it overall. I think only other thing maybe you could combine with just higher time frame trend, higher time frame structure, right? So we know we're not just buying into a super aggressive downtrend day over day over day, and maybe down below 40 or 50 points we have higher time frame structure, we have prior day low or overnight low, some kind of combination like that maybe could help out. But this could be all you need, right? This could be all you need.
That's very interesting because you're saying you could take longer trades on this strategy. I'm gonna work on that. It's very good. And by the way, if I did this, the trade could be much longer and more profitable in terms of I'm maybe a trading stop would work very well on this one. BlackArrow has a trading stop you can do on the platform. You don't have to keep watching. You can go grab a coffee and the trading stop is gonna be there. So thank you. I'm gonna think about it.
Yeah, it's all about testing, and again, I think I'm trying to give something, right? I'm trying to give some kind of critique, but of course, I'm not going to know what the 21 EMA is, specifically at that time of day. But I'd say, like, just in general, when we think about market context and what the market makes us available for us, if we're in choppy back and forth market conditions and we're looking to trade within a range, we're looking to buy and sell extremes, maybe that's going to be better suited for a fixed 1-to-1 or a very tight take profit level where we're just looking to catch these small bounces. For trend following, trying to get in on the turning point and to capture some of the trend, if that's the goal, the way to do that is to really allow for that trend to develop. And what will happen probably with a trailing stop or doing something that we're talking about, probably have a lower win rate. You'll probably maybe not win half of the trades that you take, but that R multiple could be much larger. So I think the way to think about this is, we don't have to have a super high win rate. We don't have to have a super high risk to reward. We just have to have some combination that creates a positive expectancy, right? Something that's past the natural break-even win rate. So that's the challenge we're all up against as traders. But yeah, always happy to look and see another trade. Nice trade, worked out well.
Thank you. I'm glad you said that about the win rate, because that's something that people tend to like. Oh, I gotta have 80%, 70% win rate. Man, it doesn't matter if your risk is not set up in a good way. It doesn't matter how much you actually win if you're having a small win and big losses.
It's one of the biggest challenges I think that I faced and many traders face, where we're told we have to have a high win rate, or we have to make 2 times what we risk. We have to make 3 times what we risk. That's the only way to be profitable, and that's just not the case. We are faced with the randomness of the market in the short term, and the fact that markets are not completely random, but the fact that we're all starting from essentially break even. If we entered with a 1-to-1 and random, buy or sell, if we didn't have commissions and fees and maybe, strong trending markets, we would end around break even. So if we come back to that and we think, how can I improve my win rate a little bit? How can I win a little bit more often? Or how can I improve my risk to reward? How can I make a little bit more when I'm right and lose a little bit less when I'm wrong? Rather than, I'm going to create a 75% win rate with a 10-to-1 risk to reward and crazy, I think it makes it simpler. And I think that was a big part for me, where I looked at my chart, like I was saying, my equity curve, and I was a straight shot down. I wasn't blow up every day, but it was just a slow bleed. And it was a tough day to go, man, if I just randomly clicked the button with a 1-to-1, I'd probably be closer to break even. I probably wouldn't have lost as much money. So how am I doing things so wrong that I'm worse than just a random button click? So I think a lot of traders that are struggling earlier on, or even as you get more advanced, don't lose sight of what we're actually trying to do here. And you can keep it super simple and keep that focus on, trying to create a positive expectancy, some combination. You can have a very low win rate and a very high risk to reward. You can have a very high win rate and a negative risk to reward. You can risk 100 to make 50, right? Some people are totally against that. It's fine. It just comes down to you as a trader, what you can do consistently, right? What fits well with you emotionally and from a psychological standpoint, and then what market you're trading, right? What it makes available. You might trade a very strong trending market, and it makes sense to hold for these big trades. They only play out 30% of the time, but that makes sense. You might trade a very choppy, consolidating back and forth market, and it makes sense to scalp really tightly. So there's more than one way to do it for sure.
Yes. So now let me get back to the now. Guys, this was Zach. Real. By the way, we didn't speak about the real deal. So what's up with the real deal, Zach?
Yeah, it's just the name. Real Deal Futures is my brand. Real Deal Zach is something I came up with. I think what I was trying to emulate when I picked that was when people would talk about traders or talk about people in sports and somebody that was transparent and showed the wins, showed the losses. They would say that guy's the real deal, right? He's showing it all. That's the real deal. So that's where Real Deal Futures and Real Deal Zach came from. Do you want me to plug the socials? I think that's what you were going to.
Yes. Now where people can find you.
So it's realdealfutures.com. That's the website. You guys could head there. All my info is on there. As far as YouTube, X, Instagram, it's Real Deal Zach across everything. I trade live often. Again, head to the site to get the most updated info, depending on when this is going to drop. I trade live often. I'm more than happy to show you guys what my trading journey looks like, right? Even though I've been in the markets, I've done well. I still don't believe I'm the best trader out there. I don't have some magic strategy to tell you. None of that. I'm just happy to talk about what real trading is like for me and, what's helped me get to this point. Instagram, ton of fun stuff, giveaways on Twitter, all that fun stuff. If you're struggling, if you have a question, anything that we talked about today, if you disagree with something, please reach out to me. Send me a message. I always try to respond.
All right. Thank you, Zach. So guys, we're going to have his social media in the description of this video. So please go and check his social media and make sure you follow Zach. Zach, thank you very much for this episode. It was great having you here. Hope to see some projects in the future. Maybe so. Let's see how it goes. And again, thank you very much. And that's it. One final advice for the traders.
Keep it simple, guys. Keep it simple. Focus on being a good risk manager. Limit your downside risk. And remember, it's a long game. It's a long game. If it was easy, everybody would do it. Thanks for having me.
Thank you. I'll see you guys. See you soon. Bye-bye.